Practical accounting. Number 15. Is it debit or credit? This is a puzzle for many people, especially students of accountancy. Why do you say debit as in, when the bank credits my account, whenever I deposit my money in the bank? Let's examine this situation. If I bank $1,000 into my Westpac Bank account, there are two entities involved: Colin and the Westpac Bank. Assuming Colin has his own books of accounts, and Westpac Bank has its own books of accounts, three things will happen. Number 1. Transactions will occur. Number 2. The movement of cash from Colin to the bank. Number 3. The transactions are recorded in both books of accounts. Let's look at the books of accounts for both parties, Colin and the Westpac Bank. Number 1. The transaction: banking $1,000 into Colins Bank account at Westpac Bank. Number 2. Movement of cash: $1,000 moves out from Colin and in to Westpac Bank. Number 3. Accounting records in the books of accounts as follows. Colins Books of Accounts. 1. Credit cash book. To record $1,000 out from Colin. Credit CR as out to record $1,000 into Westpac Bank. Debit DR as in. Now let's look at the books of accounts for Westpac Bank. Westpac Bank books of accounts. 1. Debit cash book. To record $1,000 in to Westpac Bank, debit DR as in. 2. Debit Westpac Bank. To record $1,000 out from Colin. Credit CR as out. We see that one is a mirror image of the other, creating an asset, what we own in Colin's books of accounts, and a liability, what they owe in the Westpac Bank books of accounts. When we see a credit balance, that means the bank owes you money. You have money in the bank. When we see a debit balance, that means you owe the bank money. You have a bank overdraft. So remember, debit is in, recorded as DR, and credit is out, recorded as CR. Another business tip from learnaccountingfast.com. Next, we will review what we have covered in Practical Accounting.